Trading Nut, episode 168.
The ability for you to know that this trade I'm currently on could either be a loss or a win, and not start thinking win will make you a better trader.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind. What's up, traders? Welcome to another installment of the Trading Nut podcast. I'm your host, Cam Hawkins, and today we've got Jeffrey Benson in the house. Now, Jeffrey is a Nigerian trader with a mission to give back. Look, he gives back massively today as well. In fact, we talk about a whole bunch of things, but one of the things we do talk about is why he stopped strategy hopping and the two things that he focused on instead. So that's coming up, and we did a video afterwards as well where you're actually going to get to see how he does it all, right, and detailed step by step. And this is quite amazing, and we talk about how he actually did this massive account flip from like $47 to $1,000 in a very short period of time. So you're going to find out how he enters, how he exits, and all that sort of good stuff. But for now, it's all about his background and how he got to get to that point and some of the details around it as well. So merging them together, you've got essentially a full-on package there, and Jeffrey definitely is giving back. Now, there are a lot of things going on here at Trading Nut at the moment. So many, in fact. There's three big things, though, that I want you to know about. So I'm going to go through those three just before we get into the show and really want you to concentrate. So first one is we've got a new sponsor. So the new sponsor is BitGet. Now, BitGet is the world's largest crypto derivatives copy trade platform. What does that actually mean? It means it's the perfect crypto exchange if you're a trader. So, guys, they also sponsor Juventus Football Club. So that's pretty big, right? Juventus Football Club. I'm kind of waiting for my Juve shirt to turn up in the post, signed by all the players. Don't know if it's going to happen, but that's my wish. Anyway, look, you're going to be hearing more about them in the coming months. And if you do want to head over there and join today, then you're going to get up to over $150 worth of rewards after you join. Okay, so guys, go and check that out. There'll be links in the description and in the card above. So check that out whilst you're listening to the show or afterwards. Number two here at Trading Nut, a big thing that's happening this week is you would have seen episode 1 of the Smart Money Concept series go live last week. Now, we're going to have more of those from Nathan Jester at Ariel FX, but it's not the only thing they're doing. We're going to be going and doing a live trading session, and this is going to be a kind of regular thing with these guys. Live trading session, which is going to be live streamed, so you guys are actually having the chance to pick up maybe some trades in the market with these guys using their Smart Money Concept. So Smart Money Concept experts, live trading here on the Trading Nut channel. If you want to get access to that, you're going to have to just hit subscribe, hit like, and you'll make sure you click on that notifications bell and click all to get notified when these things hit the channel, or just subscribe somewhere on Trading Nut and I'll make sure you find out about it. Number 3. Now, number 3 is the biggest thing happening here this week, and trust me, it's a busy week here at Trading Nut. This is the Trading Nut Funded Cup. So this is starting. This is with my sponsors, City Traders Imperium. So these guys have helped me put this together. There's over $190,000 worth of prizes up for grabs. The competition starts just after the 15th of April, so you've got that time to register. If you want to check it out, head over to tradingnut.com/TNFC, and that stands for the Trading Nut Funded Cup, before 15th of April 2022. So there's plenty of time, but go and do it now. Register, show us what you've got. It's a demo trading competition. You're going to see the rules there. You're going to see all the prizes there. We're going to hear from City Traders Imperium in just a second and find out what exactly is involved in this. So why don't we see with this little ad that's going to run right now before we get into the interview. Here we go. Righty-ho, folks, I'd like to introduce you to something new here on the Trading Nut channel. It's the Trading Nut Funded Cup, sponsored by City Traders Imperium Funded Trader Program. You can win almost $200,000 worth of prizes. That's for the top 10 winners, and the top prize takes away a $100,000 funded account with City Traders Imperium. Folks, if you want to register for this and show your skills as a trader, click on the link above or the link below the video or in the podcast description, then sign up for free before the 15th of April 2022 and get 10% off any City Traders Imperium funded challenge just for entering the competition. Good luck, folks, and we'll see you in the cup. All right, folks, here we are on Trading Nut. We've got Jeffrey Benson in the house, a Forex trader over there in Nigeria. Welcome to the show, Jeffrey.
Amazing. Thank you for having me.
Well, look, it's fantastic to have you on board. I know you've got a lot of fame through your funding challenges and being able to get funded with all sorts of people, including these guys here, including my sponsor, City Traders Imperium. So let's start off with your journey first, though. How did you get into trading, and how did you get to the point where you were able to get funded?
Amazing, yeah. Super excited to be on this channel. Thank you for giving me the opportunity. Okay, so how I started just dated back to 2017. 2017, where I went for a seminar held here by that's a company, IML. So I got there. I was introduced by a friend. So when I got there, I was really open to the about the whole idea that they were trying to push all in our heads. But I wasn't really concerned about the promotional thing, their referral system and all of that. But one thing I'm still grateful to them about was they actually told me about the information Forex. I never knew that stuff. I knew it existed, but I never knew that I could participate. So they made it very, very easy for me to understand that, yeah, every individual could participate. And also thanks to my friend who also took me there. His name is Mr. Kunle. Shout out to him, wherever he is. Okay, so that's how I get started in the Forex trading industry since 2017. So I only had money to fund one time. Like I only had money to pay for my subscription. So I couldn't renew, because I never really had money. I just dropped out of school then, and there's not enough money to continue. So I just continued my learning on YouTube. So there weren't enough information on YouTube as at that time. Okay, so what I was able to do was I talked to a guy, Ricky Gutierrez. He's a stock trader, and Steven Dawes.
What was
Ricky
his name?
Gutierrez.
Ricky Gutierrez.
Ricky Gutierrez. Yeah, he's a millionaire stock trader based in Arizona, United States.
Right.
So I was just listening to his advices and all of that. And thanks to Jubilee too. Jubilee did an interview one time, or a comparison, day in the life of a trader and day in the life of a food delivery guy.
Oh, I saw that one. Yeah. Okay, yeah, I saw that one. Yeah.
It went really viral. Yeah,
that
video really motivated me. Motivated me. I said, no, I'm definitely going to do this thing. So that's when I started learning. So I made a promise to myself, if I'm able to get this thing, I'm going to make this knowledge very available to people, little or no money at all. So that's why I dedicate Fire Pips FX to that. So there are free video courses there, and I teach people on how to trade apparently for free. All right. So it's only on mentorship that you may want to pay somebody. You can actually learn everything on my YouTube channel or even on the website absolutely for free. So that's the reason why I made that available, because I know there are a lot of people who don't really have the money, but they really want to get this skill set, just as I did too. Because starting out, I never really had the money. I was still with my brother and all of that, but right now I'm all alone now.
Hey folks, with so many crypto exchanges to choose from, why not choose the best one for you? And here are 3 massive reasons why my sponsors BitGet are the perfect choice for traders. Number 1, they're ranked among the top 10 largest crypto exchanges for derivatives trading, which is pretty good, right? Number 2, they've got a trading competition that gives you a chance to win a heap of Bitcoin. So if you haven't got any Bitcoin, great way to get some. Number 3, the copy trading platform not only allows you to follow profitable traders, but you could earn crypto by letting others copy your trades too. So to get involved, click the link in the description below or in the card above, and then follow the 4 steps, and you're going to get over $150 in rewards. So how did you go from doing this IML course or seminar to saying, well, I can't afford the subscription for it. Now, how do I jump on YouTube, find information? What stuff stuck with you and what stuff didn't? And how did you sort of navigate your way through the information that was available?
Exactly. So starting out, I did some crazy mistakes. Like I kept looking for strategies, just as everyone would be looking for strategies here and there. Oh, what is this guy's strategy? What's that guy's strategy? What's that? So that's the mistake that I did. Okay. So when I started getting back my senses was like 2018, mid 2018. That's about June, July. Yeah. Started knowing that, okay, all strategies actually do work. You have to just keep to it and learn risk management. So I went back again from Ricky Gutierrez. I think he has some couple of videos regarding that. So I started learning from his free advices and all of that. I also learned from Steven Dux, and I also learned from Adam Koo. Yeah, these are also great guys too. I also learning a lot of advices from. And I also had a trading buddy back then in Malaysia. His name is Jeffrey Ong. So we were always kind of like sharing trading ideas, and this guy, he's a genius. Yeah, he's a genius. But I never knew. I just sort of lost his contact right now. So he was a genius telling me how to go about things, what to search for. So basically, started looking out for risk management ideas, trade management ideas, and also how to think, how to manage my portfolio and all of that in the long term. So I wasn't looking out for my weekly result or my daily result. I was looking out for like long term, like 3 months time, in 6 months time, in a year time. So that's the thing that actually made the difference.
And so you like, I've heard this before, and somebody, other people have said all strategies work, and I think I saw it. I even heard it just the other day watching some video. Now, that's got to be there's got to be some context around that, because a lot of people will be out there going, well, in fact, all strategies don't work. There's got to be why do you say that all strategies work, and what's the sort of thinking behind that?
Okay, as long as any strategy that you're using has an edge, it's definitely going to work. Like trading is, whether you've done your analysis and you are so sure it's going to be a buy, there's a slight chance that it could as well be a sell. All right, at any point in time, since there's a slight chance and that it's going to be a sell, so hence there's a need for risk management, money management, because if that slight chance of it being an opposite direction of what you already chose happens, then you're going to be wiped out if there is no risk management. So at each point in time, as long as the candles are moving, everyone have their own thinking bias. Everyone have their own direction. Oh, maybe I'm thinking, GBP USD is going to be a buy. Then you're thinking it's going to be a sell. We're both correct in the long run. All right. So what really matters, whether you know you're going to stay in the trade for a long time, is what is your exit and what is your entry point? As at what time are you getting in on the trade, and what time are you leaving the trade, and what are you currently risking? So if you've got an account of $100,000 and you have about, let's say, like 100 lots on that, trust me, you're not going to stand the test of time, because you might just be wiped out. Maybe about 50 people move against you, or something less moved against you. You might be wiped out. And wow, maybe I've got an account of $1,000 and I'm just in with 0.05. I mean, I'll stay to grow that account. So basically, all strategy just work. Strategy just about entry, exit. All right. So I mean, the trading strategy, that's just about exit and entry. All right. So what's really matter is your risk management, money management, trade management, and your psychology. That's what matter in the long run. That's what makes sure you make money in the long run.
And okay, so diving back into like what you eventually sort of landed on, or when you started seeing things working a bit better, I mean, what were some of the things that you changed to get to the point where things started, your accounts weren't being blown and that sort of thing?
All right, the things I started doing was I started reducing my risk, because before then I never knew what risk was. I just traded. Okay, if you ask me what lot size am I on, I mean, what am I risking in my account? I'll just tell you, I'm with one standard lot size, 0.1 lot size, and I'll just talk in terms of lot size. So what changed for me was I now knew what risking a particular percentage was and how to manage that. All right, so that's what changed. So I started risking 1% per trade, 0.5% per trade. So I scale on. So when I'm in profit, I make use of my equity build up. So I start stacking and all of that. So that's how my things just change. And I stuck to one pair. That's really, really very important. So if you're listening to this podcast right now, I want to challenge you, sticking to one pair. If you have been trading multiple pairs and you see it's not really profitable for you, just restrict it to a little pair that you understand, a few pair. Like for me, I just stick to one pair, which is GBP USD. That's what I do.
Yeah.
For over 4 years now, I've just been trading one pair.
Oh, really? Okay. And now, okay, that's interesting. So you're talking about like how your risk management, and you're also talking about the fact that you're scaling into trades and you're using the equity. So when you're doing the 1% risk on your initial trade, what percentage are you risking on the equity that you've gained on that trade? And is there a set stop loss for that second and third and fourth entry, or are you like just saying, well, if the whole thing comes back to zero, I'm out from an equity point of view?
Yeah, amazing. I get asked this question a lot. So what I do is, let's say, for example, on a 100K account, and I want to risk about 1%. So risking 1%, obviously, that's 1,000. So I'm going to put in my lot size. I use position size calculator a lot. Anyone from, so I just put in 1%, risking an average of 20 pips. So that's what I do. So that should give somewhere around maybe like 5 standard lot size to use. Okay. So what I'm going to do, I'm going to split my 5 standard lots into 5 places. So I'm going to be getting in on each entry with 1 standard lot. Okay. Yeah. So my stop loss is going to be 20 pips or less, depending on structure. So I'm just saying 20 pips, for example, depending on structure. Sometimes it could be like 14 pips, it could be like 15 pips, but max average of 20 pips. All right. So I'm going to put it like 20 pips away. Okay. And once price start moving on my favor, I keep scaling in with 1 standard lot, 1 standard lot, 1 standard lot until my 5 standard lots is maxed out. So I'm only allowed to have 5 positions at that particular time. All stop loss still maintain at the same point. All right. All stop loss all at the same point. So once price start moving in my favor, then I'm going to move my stop loss of 20 pips to, I'll keep tightening it, let me say about, depending on how market move, market structure is dynamic. It keep moving, but until it's at break even, that's when I'm allowed to scale in. All right. So you see, my first entry becomes somehow aggressive sort of, or close to conservative. Then my second entry, I want to make it aggressive. So my second entries will now be times 2 of my initial lot sizing, like 2 standards, right? Why am I doing that?
Why? Yeah.
The reason why I'm doing that is I want to be able to make maximum use of the move in my favor. Let's say I'm on a long. I want to make maximum use of the move in my favor because I never know when I'm going to catch that nice opportunity. And it's also worthy of note, I don't do this all the time. I only do this when the market is really uptrending, like strong trend. All right. So when there is any slight retracement to the downside, so I'm going to enter in with 2 standard lots. That's already if my other bottom ones, my risk at the bottom is already at break even. So I'm using the profit, unrealized profit from these 5 trades to make this new trade. So I'm entering 2 standards at, let's say at least 2 or 3. I'm just going to hold on. So once I keep moving in my favor, I keep getting 1 standard like that. So that's how I scale up.
And that's really interesting. Now, just so I've got it in my head clearly here, so when you're scaling in on that initial, potential to be stopped out before you're at break even, are you scaling in between 0 and minus 20 pips? Is that where those 5 positions are? Or are you putting positions above that initial entry to then...
Yeah, I'm putting position above that entry.
Okay, so
and
the
stop loss is still out. Yeah.
The first position would that be 1 lot? The first position that you put on?
1 lot, yeah.
Okay, and then once you move, let's say 5 pips in profit, you're going to put another position in at
not
1
necessarily
lot.
In profit. It could be
in loss. Yeah. Okay. Right.
Yeah. That's dollar cost averaging.
Yeah.
So I learned that from stock trading, from stock traders, and I just implement that in forex trading.
Okay, so it could be in profit or it could be in loss, but you're going to keep adding to that position, and then when when it's pushed, let's say a buy, when it's pushed high enough up, you're then going to go, well, let's lock everything in at a break-even level.
Correct.
So, and then you wait for a push and then a retrace, you get in again, and okay, cool. And so that is it's ingenious and it's aggressive. And where did you learn that particular approach?
I learned that from dollar cost averaging. It's a very popular way of trading stocks. So I just brought that into the forex space and add a little tweak to it. And as long as my risk is within 1% when I'm starting out, I'm not hurt. As long as if it's keep coming against me, instead of using just 5 standard lots outrightly, I'm just going to break it 1 standard. As long as I'm still within the risk scope, I'm good. So I learned that from basically Ricky Gutierrez, his explanation. So I also read up some article on Google, dollar cost averaging. So if you can just do a little research on that, you understand what I mean.
Yeah. And so did you, how hard was it for you to start working with this to make it work? Did it work straight away or was it like trial and error?
It was really hard for me, like trial and error. Just as some people, if you want to go try the same system, you're going to also have some trial and error because it needs consistency, it needs experience. When to double down, when to agree, oh, I'm wrong. That's a major problem people have. You have to agree early that, okay, I'm wrong. This is time to hop out. This is time to get stopped out. But some people, you still want to hold on to your position. No. Whenever you're stacking, whenever you're using the dollar cost average system, if it's against you, it's against you. Do not try to move stop. Oh, I trust this analysis. It's definitely going to move in my favor. That's one of the major challenges we have with this whole thing. So that's when I had my fingers burnt starting out my early days. So it was really difficult trying to master this thing. So people see it everywhere. When I do a screenshot, I get criticized a lot on Instagram, show them, oh, but Jeff, this is not the right way of trading. I always tell them, even though, like, I already know what to do. I already know what I'm doing. I know when to get out. I know when to exit. I know when to scale in. So it needs a very good way of managing trade, which is trade management. So you have to know when to move your stop loss, when to break even, and all of that. Yeah.
And so just like trying to get it right in my head, what time frames are you working around? Because I'm assuming that if you're trading it, if your entry setups on a like, let's say an hourly chart, then you're probably going to be wanting to get in on a 5 minute or a 15 to get these positions.
Amazing, yeah.
Yeah. I mean, how does that all work?
That's what I do. I'm a day trader. So basically, I'm a day trader. So I done my main trade on 4 hour, current trade on 1 hour, and my entry time frames are always on 15 minutes. So I'm always on my 15 minutes watching. So that's when I scale in position.
Okay, cool. And just back to like the overall strategy to get you into a trade. I mean, what kind of techniques are you using, and is it pretty rigid, or is it just a whole bunch of things that you've come up with over time?
Pretty simple. It's simple. I just have 4 checklists before I hop on trade it. Very simple. And that's, I make use of psychological levels, which are round up numbers. Okay, like, let's say like 5, 10, 15, or all of that. I'm sure you know what that means, like psychological levels, round up numbers. So I also make use of trend line, not the traditional way people use it. I just have a refined way of using it and a nice tweak. And I also do make use of a concept that I developed, I and the other guy, Jeffrey Young, we came up with from experience, from true backtesting. You know that this truly works. It's called high and low of the week. There's a way we can know the highest point price will likely get to for the week, and the lowest point price will likely get to for the week. So whenever we have a break up to that point, then we're going to know, okay, it's going to be more of buys for this week. So we just do more buys for the week. All right. If it breaks below, we just know it's going to be more of sales. So we do more of sales. It works every time. Last week, it did really work. All right. I talk about this a lot on my YouTube channel too. And the last on the checklist is chart pattern. Okay. So if you would check GBP USD a lot, you find out that the chart pattern that works crazily all the time is M and W's, or you can call them double tops and double bottom. They work crazily most times. So those are the 4 entry checklists I use.
Cool. All right, so we've sort of dived straight into some of the trading stuff. So how often out of like 10 trades, say, would you end up putting that initial 5 positions, whatever it is, to break even?
How often?
Yeah, how often out of, let's say, 10 trades?
I mean, like how often? I do that almost every time. Like for me, I barely trade. Like today's Monday, I'm not gonna trade. I don't trade on Monday. So my trading times are always Tuesdays, Wednesdays, Thursdays. So sometimes Friday I don't trade. All right. So it's always what you have noticed. It's not every opportunity that is an opportunity that is for you to trade, that is meant for you to trade. So most days, typical days, I only have 2 entries a day. So I'm a very patient trader. So that's what I've learned over years. And I trade just 1 pair and I'm very patient. So most of the time that I enter the market, it's sure that I'm definitely going to come out with profit. I'm not even capping, yeah. So most times that I'm in on the trade, I definitely will have a break even most times because I've already trained my eyes. Imagine I keep doing one thing over and over again. So there's this quote that reads, I think it's by Jet Li. He said, "It doesn't fear a man who has practiced 10,000 kicks, but it fear a man who has practiced 1 kick 10,000 times." So that's who I am. So I've practiced one thing 10,000 times over and over and over and over and over again. So that's what I'm also training my students to do too. So I mean, any time that I'm already in on a trade, I'm stacking on a trade, there's definitely sure that I either come out at break even, small loss with the risk that I already predetermined in my mind, like 1% risk, maybe 0.5% risk, exactly. So I don't go out of scope.
Okay.
So every day I always tell myself I'm risking like 3%. So if my first entry, I'm losing 1%, I want to go in maybe a little bit more aggressive. I might lose 2% and all of that. But the truth is I always know what I'm risking. I always know what I'm risking at each point in time.
That's cool. So guys, I mean, from what I hear Jeffrey saying is that you should be able to go onto GU, jump on a 15-minute chart, and essentially see the same pattern happening every single day that you can profit from. Is that too simple to look at it that way, or
very simple? It's very simple. Yeah, it's so simple to look at. But I'm just going to tell you, trading idea generally, it's simple, but it's not easy. What makes it not so easy is because of the psychology. Yeah, once you have 1 losing, 2 losing streak, 3 losing streak, and you already start feeling off balance and all of that. All I'm just going to tell you, keep at it, keep doing it, what you think you're doing. As long as the strategy has got an edge, keep doing what you're doing, definitely, and reduce your risk, and you definitely will have breakthrough in no time.
And how would you say? What would you tell somebody to get them to understand that their strategy does have an edge? What would you say for them to do?
All right, fantastic. So your strategy, you have to make sure, like any strategy that has, let's say, like about 45% win rate or 50% win rate is good to go. All right. Just the only thing you have to make sure you're doing is have at least 1 to 2 risks to reward. So let's say, for example, I've got a strategy that gives me 50% win rate. And okay, that simply means every 50%, every time I enter, I could either have a loss or a win. All right. So 50%, and you are doing 1 to 2 risks to reward. So 50 times 1, your losses, then that's 50. 50 multiplied by 2, that's 100 profit. All right. So what that simply means is whenever you're on a trade, you are risking 2 pips, your stop loss is 2 pip, target 4 pip. All right. So what that's at the end of the time is 50 multiplied by 1, that's 50. 50 multiplied by 2, that's 100. So 100 minus 50. So you're still positive at the end of the time, 50%. I'm sure you get what I'm coming from.
Yeah, I get what you're saying. So,
So even if your strategy is 50% win ratio, you still would be good. Just make sure your risk to reward is 1 to 2.
And so with this approach that you've got where you're actually layering into trades and you're layering into positions initially and then stacking on that position,
yeah,
how does that impact your risk to reward? I mean, how do you know when to get out of all your positions and at a profit, and is it like as simple as a 2-to-1 risk to reward, or what does it equate to at the end of the day?
Yeah. Okay. Amazing. Fantastic question. So what I do is sometimes there are times that I told you I don't do this all the time. I only do this when market is strong trending. So that's why I said that. All right. So, but basically we have other techniques of hopping out from the market. It's what we call multiple week rejection in GU. If you check GBP USD, you're going to see anytime price gets to psychological level, round up numbers, and you see multiple week rejection, get out really fast. So when we see that, we don't wait for our take profit to be hit. We just hop out, because it's better to get out at a very nice price than holding your trade and retracing against you and hitting your break even. So starting now, I did that mistake a lot of times. So I have to start looking out for other ways to get out. So that's when I found the multiple week rejection strategy. So whenever we see multiple week rejection, we just hop out. All right. So that's why we scale in. So scaling in is also almost equal to having 1 to 3 risk to rewards, because we start scaling in multiple positions, and that's a very nice risk to reward right there.
So the actual price, just in my mind, that trying to get it right, the price might actually only go 1R from your initial 20 pips, but because you've scaled in, you might get away with equivalent to 3R. I mean, hypothetically speaking. Yeah. Okay.
Yeah, that's what happens.
Okay, that's really interesting. In fact, now, what about you? So you talked about you only get in on trending, like when the market's really trending strong. Does that mean you have to sit out like a few weeks on end, or what do you do when it's not trending and it's in a range for a while?
Basically, there are always trades every day. As long as the candles are moving, there's always an opportunity. But it's not every opportunity. Just as I said earlier, it's not every opportunity that is right for you. All right. So there are some days that they definitely would be tradable. Like some weeks, there are no trades, but that barely happens. So every day you always have 2 opportunities on GBP USD, either to go short and to go long. Every now and then, London session most especially. Because I'm in GMT +1, just 1 hour ahead of London right now because time changes. This day, I think I get 2 opportunities strongly every now and then, most especially Tuesday, Wednesdays, and Thursdays. I get opportunities.
And so what would keep you out of the market? Like, do you ever like look at the chart and go, I'm not going to even bother today? other than Monday and Friday? Is there something you would go, nah, I'm out?
Yeah, during bank holidays, I definitely will not want to trade. US bank holidays or Great British pound bank holiday, I'm not going to trade. Maybe times of like news. When I mean news, like crazy news, like the one of Russia and Ukraine and all of that, because price will just start misbehaving. So I'll just get to the chart, look at the whole thing, and I'm not trading. Time of consolidation, basically, I'm not trading.
And so what does your typical day look like, your trading day?
Yeah, my typical trading day is very simple. I wake up really early. I wake up like 5 and do my prayers because I have a very close relationship with my maker. Yeah, I do my prayers and I head straight to my trading room and start checking my charts and all of that. So the basic thing I just do right now is I did videos because I'm also making YouTube content. I also have a mandate to make sure I train people too online. I start editing videos. Sometimes I come up with trading ideas, videos that I could incorporate. You should already know, like creating content for trading can really be very tasking because people want to see you making that money, want to see you trading, they want to see you, all of those things. So I have to come up with ideas to teach them complex ideas in simple way. Okay. So apart from that, I just chill on my trading desk, test out my risk management because I love risk management because of the way I trade. I enter a lot of positions. So I just see that by myself, keep testing new risk management techniques, start watching, okay, what's currently happening. Because since markets are dynamic, patterns do change. I keep checking. When I mean patterns change, not that it changed from M. There are times that we have to double bottom or double top. The first top might be longer than the second top. So I just keep checking what's happening now. What is it changing? To what extent is this one longer than the other one? All right. So I just keep testing around that, my strategy, my entry techniques, my risk to reward and all of that. And I also catch up with friends too on social media. When I mean friends, traders, I love association of traders and all of that. And I'm online, just keep chatting. And I also reach out to my community too on Telegram, on Instagram, just keep chatting with them, encouraging them, letting them know that this is how the journey is. It's not every time that they should trade. And I'm dropping some funny memes too on Instagram, just here and there. Yeah. That's what I do.
And so I mean, with all this going on, how do you focus, like, or at least get your head in the right space for the trading part of your day? Because I mean, like, this is something I sort of struggle with myself because I've got, like, YouTube channels and meeting calls with the likes of you and other people. I mean, how do you actually sort of give yourself that structure so that when you're trading and there's nothing else distracting you, or are there distractions that you have to deal with?
Exactly. Funny enough, I've got routine. Like, you can check my book right here. I've got my daily routine, and even right here on my board too. I have everything written out, and I've got sticky notes every time reminding me. So I've got an Instagram time. I've got Telegram time. I have time for my team. I have time for trading. So basically, from 7 a.m. my time, that's why I have time for this interview. So 7 a.m. my time to about 4, I'm always on my trading desk, trying to get my head straight in trading. Since today is Monday, I can just play around. I can do a lot of things. I can host shows, do interviews and all of that. But on Tuesdays, Wednesdays, no, I'm not talking because I don't really know how to focus on a lot of things. I don't know how to focus on. I can't do too many things at the same time. I just focus on one thing, trading, and I keep watching. I could listen to motivational, inspirational things, quotes and all of that, and read a book regarding trading psychology, like Matt Douglas. I really have to give him a shout out. Like, it's a nice thing. That book that he has there, trading. Wow. Sorry, Mark. Sorry about that. Mark Douglas. I'm sure you know about Mark Douglas.
Yeah, Mark Douglas.
The popular book.
Yeah, Trading in the Zone. Yeah.
Trading in the Zone. Yeah. So that book really, really helped me a lot. So I keep listening to the podcast. There's one of the voice one from Audible. I downloaded that from Audible.
Right.
Yeah.
Oh, that's a good idea. I read the book, but and I've got Audible all the time, but I've never I didn't realize you could download it. I should think about doing that.
I keep streaming that. And listening to that over and over again. Yeah.
Awesome.
That helps me a lot.
Now, what do you reckon? What would you recommend for somebody who was like working a day job? They want to get into trading. What steps would you say? Go and do these steps to get to the point of, at least getting an account break even or profitable.
Yeah, I'm not even gonna lie. Yeah, doing a day job and trading is not easy. It's not easy. Like, kudos to those guys doing it right there. I give it up to you. So what I would recommend is you want to switch to a longer time of trading, longer time, like swing trading. That's what I see. So you have to start looking at from your chart. Look at main trend on weekly time frame, current trend on the daily time frame, and you can do your entry on H1, one hour time frame. That's what I see. That's number one thing. And second thing, how to handle this psychologically is do not deposit small amount of money. You have to make sure you deposit something like 5,000 upwards. Why am I saying this? That's when your risk can actually pay off. I mean, you wouldn't want to be depositing $100 and start swinging with $100. There's slightly going to be a chance that you would over leverage on that account because you can't be risking 1% on $100. All right, you can be risking 1% on $100 because and your stop loss is also going to be very wild. Since you're a swing trader, you should be looking at stop loss of let's say like 50 to 100 pips, depending on kind of trader you are, because swing trading requires a huge stop loss. So also you're also targeting something really huge. Okay, so you want to fund with an amount that is huge, like $5,000 upward, and do not risk too much. Risk at least from 0.5% to 1% per trade. Okay, and you can look at your trade maybe whenever you're done with your day job and you come back in and you check. So I wouldn't recommend checking your phone while you're at work, okay? Because that can just bring some emotional trauma to you. It can just ruin the day and you're not being the best at your workplace and also you're not being the best as a trader too. So just do one at a time. Focus on swing trading and all of that. So that's why I recommend it for now.
Cool. And so why do you think you managed to get to the point where you didn't have to do the day job and you become like a full-time trader, not like a full-time, but you become a full-time trader and, got to the position where you are now? What traits or characteristics do you think has made you different from other people out there that may not, make it work?
Yeah, what made it different? I've never done a day job before. That's why, I don't know. I've never done a day job. I don't know how it is to receive a paycheck. So I started pretty early. So that's what helped me. I left school, I dropped out of school. So I was still with my brother, staying with him and all of that. So that's when I learned about Forex trading. So I don't really know how it feels to be a day jobber and trading at the same time too. So basic thing I just did was I took this whole skill set really seriously at my early age. All right. So I started making money, let's say about a year and a half. That's when I started seeing success. Okay. About a year and a half, I was able to afford my first car. All right. So then I was already stacking up money. So never to go broke again. Started doing some other couple of investment. I would bring in money every month because I know I don't really want to work. I didn't have the degree to work because I left school. So that's just what happened. So what I would just want to advise someone who is watching right now, maybe you're pretty young, like you're within the age of 17 to 18, 20, 25 and all of that. So what I did was just set your mind, okay, I'm ready to go all in with this whole thing. Since you're still feeding from your parents is paying for the house rent, your parents are the one paying for your food and everything. So you just have to channel all your energy into learning. All right. Channel all your energy, like is go big or go home broke. That's the same style that I use. So I channel all my energy into learning all this whole thing and doing some other couple of freelancing. I also did some couple of freelancing too, like working on Fiverr. I did all of that. Working on Fiverr, script writing, doing voiceovers and all of those things. So those things kept me going. I was just freelancer from day one.
Cool. So you substitute your income with a little bit of, your trading income with something else just to keep you afloat. I mean, maybe not if you're supporting a family of 5, you might struggle with that, but easy when you're younger. Now, what about a price chart? If you had to go and say, go and study these three things on a price chart, what would they be?
I want you to study how price move, price behavior, backfares. Go to TradingView. I would recommend you go for the premium so you can do a TradingView replay. That thing will have your mind. It will shift. You have a mindset shift. All right. Go back on your chart, do a TradingView replay for like about 3 months. Like for GBP USD, I've backtested GBP USD since it started up until this time, more than 20 times. I'm that crazy. I've backtested it.
Right, the same pair, the same market.
Yeah, same.
From what? Sorry, how many years? 3 years, did you say?
Sorry?
What was the starting point? How far
it's
back?
About 19. I think it's about 19. I just start from 1990s. They're about 1996 or so. They're about
All right, so you've
year,
gone that far back. You've gone that far back.
Yeah. Started over and over again, back testing, over and over, like about 20 times. Sometimes I could just go back and start from 2007, start from 2001, over and over like that. Just keep starting, like more than 20 times I've started.
I should get you on my back test challenge into a GBP USD one. See how you're probably like, I know what happens here. Yeah.
Exactly. I almost know what's going to happen next. Yeah, since I just do one pair.
Now, what about from a mindset point of view? So I've recently been looking into the fact that, a lot of the guys that are failing are failing because they've got the mindset of like, it's all fear about, once you're in a loss, they're fearing, they think the fear of making money disappears, and they're happy to sort of, risk more to try and make that money back. But once you're in profit, they're scared of giving the money away. But you're obviously doing the other side of it. You're in profit, and you're going, well, I want to put more on because we're now in profit. What do you teach people around mindset?
All right, what I teach people basically is it's not the ability for you to know that this trade I'm currently on could either be a loss or a win, and not start thinking win will make you a better trader. The earlier, the better. No matter the strategy you're using. As long as there's no holy grail, just always have in mind that this trade I'm currently in could as well be a loss, not necessarily a win. So what I'll help you do is manage risk. It will help you manage risk. So when you start thinking in that mindset, the next thing is, okay, what if it's whipsaw? Okay, some people think it's a pessimistic way of thinking. Why don't you just start being hopeful? It's definitely going to end in win. No. You have to be pessimistic as a trader. Like, always think two sides. It's not about pessimism right now. It's about you playing safe. Then, okay, this thing could whipsaw. So if it's whipsaw, what's my plan? How do I manage this thing? All right. So that's one major thing. Well, the big thing I teach people. Always know that whatever trade you are, whatever strategy you are using, whether my strategy or any legend strategy, even be it George Soros strategy, just know that it could as well be a losing trade too. So once that's happening, what do? You manage risk. And once you think in that way, you'll be fine. Another thing I also love people to think the long term. Think the long term. Do not judge yourself by the losing streak that you have today or the losing streak you have this week. Nah, if you're judging yourself that way, man, you're not a trader yet. So you have to start judging yourself by long term, like 6 months. What result can I give in 6 months? All right. So when you start thinking in terms of 6 months, you start giving yourself time to think. Start giving yourself time for the edge that you have in your trading strategy to play out. So that's why I see. That's why I tell people to.
I love that. Think about the fact that when you enter a trade, you can lose the trade. It's a losing or a winning opportunity, right? Yeah. It's not a winning opportunity.
Exactly.
Because I swear that's something I must do every single time. It's like, this is a good trade. I'm going to win this one. When I should be thinking it's 50-50. I've now got a 50-50 chance. That's so good. That is so good. Now, I know you've been funded by, as we mentioned at the start of the show, by City Traders Imperium, these guys up here, and a bunch of other outfits. I mean, have you got any advice for people going into a funding challenge and trying to get funded that way?
Yeah, I love funding programs a lot. I love the whole idea of proprietary firms a lot. I love all of them. So that's why I actually dedicate some part of my channel to reviewing proprietary firms and also recommending to people who are ready to listen. As long as you're ready to listen about funding, about trading, I'm going to first tell you about Forex. The next thing I'm going to be telling you about how to get money to trade through proprietary firms. I love it. So back to your question. So the basic thing, I have some couple of proprietary firms I'm working with right now that I'm trading for. So I started almost everyone started with FTMO. Like I started with FTMO. So I made it very, very popular here. I kept talking about FTMO over and over. So I was among the early Forex traders. I started talking about proprietary firm like FTMO. I think Blake Olsen even heard about FTMO about proprietary firms through me, and then we started talking about it and all of that. So if you can check my older video, I did an interview with Blake Olsen while I was way younger. Yeah, I was also very young. I think that was 2020 or 2020. I think so, 2020 or 2019. Back there, it's still in my channel. So, and I've done some other proprietary firms. So currently funded trader program, I'm with them. I'm working with them. I'm currently in my second phase. And I'm also working with BlueFX, working with FTMO, working with my Forex fund. So, but however, my account with FTMO got violated. I made the the 10% total drawdown. I violated that funded account. So I no longer have an account with them. So I'm taking up another one with them. So my idea is to have 2 million AUM cap in total. But right now I'm currently about 1.5. So when I'm going to add this 400K, that'll be like 1.9. Then I'll work on adding another 200K. All right. So that's what I'm working on. I'm having a lot of portfolio all around with those proprietary firms.
And how easy is it to manage all those different like accounts?
I copy trade. I do copy trading.
Okay.
Yeah. I do copy trading, and that's one thing I love about my Forex fund, and I also love it about E8 funding. They allow copy trading, but what's it called? The funded trader, they don't allow copy trading. So that's one thing I really love them to work on. Yeah, they don't allow.
Okay, cool. Now, what about if you had to recommend somebody spend the next month mastering something? What would it be?
Mastering your sticking discipline. So how I go about discipline about that is I have things written out here. All right. So I always have a mantra saying that says, you don't think while you're on the trade. You think before you hop on the trade. All right. I don't think when I'm on the trade. I think before I get in on the trade. So if you're thinking while you're on the trade, you're doing the wrong thing. So that helps me to stick to the plan. So it's whatsoever I have written out on my sticky note or my trading plan, that's what I'm going to be. That's going to be my behavior pattern. You understand?
Yeah.
So if you can stick to these things that I just said, trust me, this will be a starting point in trading.
That's an awesome little tip. That's a great little tip, actually. So think about what you're going to do. Write it down, even if maybe you need to execute the trade, right? But then write it down when you execute the trade, then write down, here's what I'm going to do, and now you're just waiting for it to happen. And if that happens,
and you stick to it.
Yeah. No, that's cool.
Discipline, just stick to it.
Yeah, I like that. Right, we're going to jump into a quick fire round, then wrap up the show. So, number one, how long did it take you to go from newbie to consistently profitable?
A year and a half. I said that earlier. Yeah, a year and a half.
What's your favorite entry setup?
My favorite entry setup is whenever I'm seeing a double top or a double bottom, and there's a psychological level right there. There is trend line bounce right there or a trend line break, and there is high and low of the week right there. That's 4 checklists that I just mentioned. Favorite setup.
What's your recommended trading book or resource?
Yeah, my recommended trading book, man, it's very funny. There's this book by Total Trading, Book of Total Trading. It was written by Michael Koval.
Turtle, yeah.
Yeah. So that book, I recommend it for everyone. So what that book is simply saying is an idea that between Dennis and his friend. So what that book is saying is anyone can actually be a trader. So being anyone can actually be a trader, that doesn't mean, so they taught them their strategy for 2 weeks. Okay. They brought people from different spheres of life, engineer, some doctor, some technician, all of them, but they taught them their trading strategy for just 2 weeks. So do you know what they kept doing every day? They kept teaching them psychology. They kept encouraging them every day. At the end of the day, they all made massive money. They were all profitable. So read that book. I recommend it. Michael Koval. All right. Book on Total Trading.
Actually, I've never read that book, so I should definitely maybe try and find it on Audible. Now, what's your recommended broker what's your preferred broker and trading platform?
My preferred broker, there are actually 2 right now, Infinox and Xness. So I love them. I love the way they do their thing, their spread, their execution speed, their withdrawal, and all of that.
MT4, MT5, which one?
Oh, I'm an old guy, except for MT4. I love MT4. Like, I'm just head-bent on MT4. I don't want to go to MT5.
Cool. Hey folks, ever wonder what broker I use? Well, I use HankoTrade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining HankoTrade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description. Well, do you want to walk us through your worst ever trade?
My worst trade? So when I was being stubborn, that's 2019. You remember the time Theresa May just was promising the British people the Brexit, and he announced that if Brexit is not a good deal, like if Brexit wasn't successful, that he's going to resign by October.
Yeah.
That period, yeah. I lost crazy amount of money when that news came out. So I had a personal account then. I never really knew about, I wasn't really big time into proprietary firm. That's 2019, May 21st, 2019. I remember the date and I can quote the time, everything. So I wasn't using a stop loss that time. So what happened? That wasn't because I wasn't using a stop loss. Normally, I always trade with stop loss, but that particular time, I wasn't using a stop loss. I think what happened, okay, I was discussing with someone and I had about 3 positions at a time, just using about 24 or 22 lots. I actually uploaded it, I screenshotted it, uploaded it on my Instagram. It's still live on my Instagram at Jeffrey_Benson. It's there on my Instagram. I lost $190,000. And I was saying, oh, don't worry, it's gonna retrace, it's gonna reverse. That's an account that I moved from $25,000 as at that's December 2018. Within 6 months, I moved it to $240,000. So I lost $190,000. So when that loss happened, immediately I was thrown off balance. I withdrew my money and I called it a quit for that particular time. So that's when I left Instagram. So I left Instagram for a while. Then I just came back. I think I came back 2021. I left in 2019. All through 2020, I wasn't on Instagram. I wasn't active. I left for good, just for my mental cleansing. So that's my worst ever trade. And I'm never going to repeat that mistake again. So whenever I'm getting on a trade, immediately my clicking a buy and a sell is also synonymous to entering a stop loss. It's a must. It's better for me to get taken out on a stop loss than being held down in a particular trade that doesn't make sense.
Then lose $200,000. Right. Yeah. Now, if you could leave our listeners with one piece of advice, what would it be?
One piece of advice from me right now is, if you are young, don't play safe. It's a crazy idea, but that's the idea that actually brought me this far. If you are young, you've got a lot of time, do not play safe. And also listen to Gary V. That's my advice. Listen to Gary V. And don't play safe if you are young. If you've got a lot of time, do not play safe. Play it big. Because you've got time. You can start again. Like as I am right now, I've got time. I can afford to fail and start again. I'll start again. But whereas if you are old, I'm not saying you've got limitations, but you have to just be very careful. But right now, because you've now got responsibility, you've got wife, you've got children, you've got people who are looking up to you. But if you're young, it's different. You're just under someone and you can afford to fail over and over again. So that's my biggest advice to younger ones out there.
Yeah, it's good advice. In fact, I've got my youngest daughter. I've just started up an NFT store for her. So she was doing little bits of art, and I'm like, let's just get this up online. So if anyone wants to buy some NFT art, send me a DM and we'll and I'll send you a link. Right. Before we wrap up, what's the best way for the guys to get hold of you?
Reaching out to me is on Instagram and on Telegram and on my website. You could do that. Most especially on YouTube. I love YouTube. So on my YouTube, I'm Jeffrey Benson. So just type Jeffrey Benson. That's me on YouTube. On Instagram, at Jeffrey Benson, Jeffrey_Benson. Benson, normal spelling. So I've got a couple of fake account right there. So please, is JEFFREY_BENSON. There's a fake guy using BENSSON. So do not do that. Report him. It's a scam. Just stick to Jeffrey BENSON.
Now, so, to make that easy for you guys, listen to this wrap up here, right? So a big thank you to Jeffrey for sharing with us today. Everything we've discussed here, along with all the links that Jeffrey has just mentioned, are going to be in the show notes. To find them, simply search for Jeffrey in the search box on tradingnut.com. Until next time, I wish all my listeners trading happiness and success. Okay, there you have it, folks. Hope you enjoyed that interview. Now, do remember all the things that are going on here at Trading Nut. I'm going to list them off again. So we've got that video that we shot with Jeffrey that you need to go and check out. Okay, that's over on the YouTube channel. We've got BitGet, my new sponsor. You can get over $150 when you join them. So go and check their links out over there on Trading Nut or underneath the video in the podcast description, wherever it is. Also, we've got the Smart Money Concept live stream, live trading session happening this week. So Stay tuned for that. And we've got the Trading Nut Funded Cup. Okay, so you want to register for that. Have a crack at one of those prizes. $190,000 worth of prizes up for grabs. Other things going on here. We've still got the Genius Trader. Doors are open for that. The price is actually going to increase very soon. So if you're looking to join and get your mindset on point, then now's the time to do that. Robot Builders Club. Doors still open for that. I'll be releasing a new robot in the lab this week as well. So there's tons of stuff going on here at Trading Nut, guys. Also, the merch stores even had a bit of a revamp. So go and check that out. See if there's a Trading Nut cap or cup or something else that you want to grab. That's enough from me. I'll see you in the next video, and I'll see you plenty of times this week, I'm sure. So much going on here. All right, guys. Thanks for watching. Thanks for listening. See you in the next one.